Good day, everyone. Today, our group will talk about the findings and learnings from our capstone project, Machine Intelligent Forex Trading. In the area of machine learning and artificial intelligence, deep learning has become a dominant field solving some of the world's most complex problems. Through specialized techniques like convolutional neural networks and recurrent neural networks, it has been made possible to ingest a wide range of data inputs to solve any problem at hand. In Forex markets, deep learning is fast becoming a novel tool to generate profit by learning through historical data. It is important since, in terms of trading volume, the Forex market is the largest market in the world with over $5 trillion of currency traded in a single day. Therefore, accurately forecasting the trend for these markets is very lucrative for traders and brokers alike. Conventional methods of predicting Forex trends may be inaccurate and ineffective due to the volatility and nonlinear nature of the data. Even though multiple implementations have been done in this area, there does not exist a study utilizing multiple deep learning methods for generating profit with long-term real historical data for major currency instruments. This project implemented 20 different base and ensemble deep learning methods, including convolutional neural networks, long short-term memory, temporal convolutional networks, and reinforcement learning. During the process, 3 novel frameworks were designed which generated more than 6 pips a day as profit and made a higher percentage of positive trades than negative trades. For our study, we took data from 2001 to 2020 from FXCM, an online trading platform. To extract insights, we used technical analysis, which concentrates on predicting future movements in the Forex market using patterns and trends identified from historical price charts. The technical indicators were generated using Python libraries such as PyT, TA, and TLib. We also use deep learning frameworks like Keras, TensorFlow, PyTorch for implementation and backtesting on 8 major currency pairs. The first paper uses AlexNet to predict the movement of geometric Brownian motion simulation data. For the input data, it is the image data with 15 days open price, close price, moving average, 5, 7, 10, and 20. For the implementation, the image data was split into train and test sets. For the final result, the highest accuracy, 51% for USD Swiss franc daily data. For backtesting, the profit is 0.4 pips per day. For daily data, incurs 28% of positive trading. The second paper implements resonance while using candlesticks charts to predict whether the price will rise or fall the next day. Improvements were done in the paper by adding Bollinger Bands, RSI, moving average, and other indicators into a graph. They're then used together to predict buy, sell, or hold. The model generated about 0.8 pips per day as profit. The first paper uses normalized data of 11 technical indicators over 11 time periods to predict hold, sell, and buy levels. Accuracy results are from 50 to 62%, and the model generates 1.42 pips per day on Euro USD currency. The performance was improved by doing repeated cross-validation folds using a rose emitter. The second paper uses 500 stocks to trade according to intraday returns. It buys 30 stocks with the highest intraday return and sells 30 with the lowest intraday returns. The implementation uses 8 pairs of currencies, buying 1 pair with the highest intraday return and selling 1 with the lowest. The MSC for predicting intraday returns is 0.05017. The total pips for using 8 pairs of currency as a portfolio is 5.1026 daily on average. The third paper builds an LSTM using 16 features and technical indicators with a window size of 20 days. The LSTM uses 2 layers and a hidden size of 10 layers. The prediction is next day's close price. Cross validation is used to get the best model. The model is backtested on 2019 data for Euro USD with an RMSE of 0.004 and 1.17 pips per day.
The first reinforcement learning model uses fuzzy neural network and direct reinforcement learning. There are 3 fuzzy nodes for representing increasing, decreasing, and no trend conditions. It is used to reduce the uncertainty in the price. Direct reinforcement learning includes deep neural network and recurrent neural network. It chooses parameters for features by maximizing a function. The function takes reward and cost for frequent trading into account. It achieves 0.8 pips per day on average for Euro USD daily price. The second paper uses dual Q-learning for reinforcement learning and got 2.36 pips per day. It uses Euro-USD daily data from 2003 to 2017 to train the model, and it predicts the buy, hold, and sell levels. The third paper uses deep Q-learning by using the close price and predicts hold, sell, and buy actions. The reward function assigns the profit when the agent makes a sale. Currently, the model is not generating profit on Forex data, but works well on stock data. In order to correct that, the reward policy is being revised. The first hybrid model is a fusion CNN LSTM model, combining features to predict stock prices. The model receives two different data representations. The CNN and LSTM separately train on normalized data of technical indicators like moving average, Bollinger Bands, and MACD. The CNN in the form of ResNet uses fusion images data, and the LSTM receives the normalized time series data. The ResNet and LSTM layers are then combined in the CNN LSTM to predict next day's close price. The model generates about 1.2 pips per day on Euro-USD currency. The second hybrid model is CNN with LSTM. It combines layers of different techniques to a single deep neural network. The graph on the right shows the architecture. Convolution 1D is used for extracting important features. The training data is Euro-USD daily prices. The root mean square error is 0.013. The daily average pip is 1.674 pip per day.
For the first model, is predict the movement of stock price by using CNN with LSTM hybrid model. Firstly, is use convolutional layer to detect the features and then feed these features data into the LSTM layers. For the implementation, the input data is the price vector, takes 21 days as the period, and use 12 indicator to represent the one date. For the result, the high-risk accuracy is 47%. For the backtesting, the profit is 0.66 pics per day. For the second CNN and LSTM hybrid model, this paper combined three base models with different convolutional layers and LSTM layers to predict the movement. The input is the price vector of taking 60 hours as a period and using 14 indicators to represent one date. For the backtesting, the model generates 5.3 pics per day profit. For the first model, the model used multi-head attention and multi-layer LSTM. The input is the price vector takes 60 hours as a period and use 14 indicator to represent 1 hours. For the backtesting, it attempt 10 pics per day profit. This is the highest profit among our 17 papers. For the second model, this model used encoder and decoder before LSTM. In the encoder, there is an input attention mechanism. It calculates the weight for multiple driving series conditional on the period's hidden state. Then the driving series will be multiplied by weight and becomes the input for LSTM. The mechanism for the decoder is similar. The data used is daily data price from 2002 and 2020. For the results, the MSE loss is 0.0188 and the profit is 0.6335 pips per day.
The first paper is a TCM model which processes the data with 14 indicators over a period of 14 days. It predicts the price of the next day after the 14 days. It is a many-to-many model using test data to do a backtesting, retain 3.82 pips per day profit. The second paper uses TCN with self-attention to predict the end contract days for non-deliverable forward contracts. For the implementation, the data is 15 days with indicators for the model. The training data is from 2030 to 2019, and the test data is in 2020. The highest accuracy is 38%, and the profit is 0.2 pips per day and 15% of positive trading. The third paper predicts the stock price and uses genetic algorithm to replace the backpropagation to optimize the weight of the neural network. For the implementation, the input data is 1 day with indicators for the model. The training data is from 2030 to 2019, and the test is from 2020. The results is the testing MSE is 0.17, and the hit ratio is 79%. The profit is 0.04 pips per day and 21% of positive trading. We tried a variety of novelty models that are different from those implemented in our paper. We choose 3 models that perform well for profits. These 3 models are all use 16 hours of data. Each hour is represented by 15 days indicators. And finally used to predict the price of the next hour. The first is a single model, a regression model that combines the structure of CNN plus attention plus LSTM. The other 2 hybrid model combines 3 base models with different number of convolutional 2D layers, and each base model have 2 LSTM layers. The third model combines multi-height attention with LSTM and CNN. After training the model with more than 30,000 hours of data, we used 296 hours of data for backtesting, and finally obtained the daily average returns of 8.7, 7.1, and 6.1 respectively. Next, let's take a look at these 3 models in detail. The first novelty model combines the 3 structure of CNN, attention, and LSTM in a horizontal direction. The inputs first pass through 1 layer of convolutional 2D layer, since our inputs is a metric of 60 multiply 14. For processing and use multi-height attention, and pass through 3 layers of LSTM to make a final prediction. For the first layer of STM, the hidden size is 80 units, and the second and third layers of hidden size are 100 units. The experiments were run to turn the parameters. I changed the kernel size of convolutional 2D layers of 3, 4, and 5, and the attention function of redo and decay redo. In the convolutional 2D layers, the hidden size is 70, 80, 90, and 100 in LSTM. The number of head of 1, 2, 3, 4 in multi-head attention, and the learning rates of 0.01, 0.001, and 0.0001, and the batch size of 32, 64, and 128. Only data from 2003 to 2017 was used, and from which 80% of these was used in train and 10% as the validation size for turning the parameters, and 10% for backtesting. The result of the model is 8.7 pips per day, and the win trace ratio is 0.46. And we can see the second novelty models is to design 3 base models with different structures. All these 3 base models contain 2 LSTM layers, and the hidden side of LSTM is 18 and 100. Before these 2 LSTMs, these 3 models have 1 or 2 or 0 convolutional layers. Each of them has a set of 60 multiplied 40. Finally, these three base models are computed to predict the price. After using the same turning method and the same data, the final model backtesting results is 7.1 pips per day, and the win-trade ratio is 0.38. The third novelty model is an improvement on the second novelty model, adding a multi-head attention structure to the three-base model before the first LSTM layer. After using the same turning method and the same data, the final model backtesting result is 6.1 pips per day, and the win-trade ratio is 0.26. From the figure, it can be seen that ensemble methods are more powerful than base models. Attention with LSTM generates 10 pips compared to base LSTM of 0.8 pips. Basic machine learning principles like cross-validation, balancing labels by sampling, and normalization improve results. Labeling methods to convert from regression to classification makes differences as well. Some of us use a greedy approach to sell when the price was higher than yesterday and vice versa. Others use the rolling windows to define the labels. As a conclusion, our projects enable us a great learning opportunity to explore new deep learning methods. Thank you for your time.